Hello traders, good evening. Welcome back to the channel. Last three trading sessions were exceptionally volatile, but at last the week has come to an end. And let's deep dive into the weekly sectoral analysis. So first of all, I would just like to update what I shared in my previous video. So we'll just understand that first and then we'll start analyzing all the sectors live. So in my previous video, I had clearly shared my view that if this particular low of Nifty spot is broken, then we could test the recent low, which was near towards 22,800. This has been tested and probably even lower. That is what we'll come to know in the next few days. And regarding Bank Nifty, what I had clearly shared that if the previous low, this particular low is taken off on the downside, which was 49,260, 263, then we'll see lower levels. And we could see that straight away Bank Nifty spot did test 48,735. Okay. Going ahead in the Nifty spot, you can see that the price is now in the flattish trend in the monthly time frame charts. Price is trading in between both these moving averages, so the trend is exceptionally flat. Again, if you watch the price in the weekly time frame chart, we can clearly see that prices in the last 5 weeks, they have been just going up and down. So more or less, it is a very much range bound market, very much choppy market. Yes, there were certainly opportunities for traders, for swing traders to take opportunity for the trades on the downside. But apart from this zone, there was not about much to talk, because overall, if we see, the range is on the upside, it is 23,800, and on the downside, the range is 22,800. So basically, we are just bouncing between 1,000 points. Now, in the last three trading sessions, the first candle is a long-legged doji, and this has come on the back of a strong support. In the daily time frame chart, we have this previous low. Then we have an inverted hammer, which is a shooting star, and then we have a candle which looks like a hammer, but it is not a classical hammer. Okay. Now there is one more support which I would like to share with all of you, which is in the weekly time frame chart. In the weekly time frame chart, if you just have a look at these two candles, this is one, this is two. So if I extend this over here, you can clearly see that these two candles have been able to provide support. So in case if 22,800 is taken off on the downside, and if price continues to move forward, then the next support will come in the zone of 22,565. That is the first level. And on the daily time frame chart, if you have a look, then that level is 22,507. So I think within the range of 22,565 to 22,500, that will be the next support band after 22,800 is taken out on the downside. Okay. And there will also be some important things which I'll be sharing at the end of the video. Please don't miss that. And just one more thing I wanted to share with all of you. I was just having a look at my data of my YouTube channel. I came to know that many people from the YouTube are watching my video, which is a good part, and you're watching because it is helping you. But many of you just watch the video and you don't subscribe to the channel. Frankly, it will help the channel to grow, and it will ensure that I keep making good videos and I keep sharing the right information with all of you. All right. So do subscribe. And moving ahead in Bank Nifty, if you have a look in the monthly time frame chart, the trend is exceptionally flat. Now there is one interesting point over here in the weekly time frame chart, is that the trend is down. I'll just try to remove this Fibonacci for you so it's more clear. So the trend is certainly down. If you can see, the trend is down since the price is up below these dual moving averages, but the direction, not direction, the momentum is slightly on the upside. Now, same thing if you have a look in the daily time frame chart, then the trend is also down, the momentum is also down. Okay. Yes, in the last trading session, we did bounce back from the downside, but the momentum and the trend both are on the downside. So there is a disconnect between the daily and the weekly time frame charts. So as a trader, if I'm trading Bank Nifty, then probably I would just leave it aside. And I would just say that if this low is taken off, this recent low from where we had a bounce, If this low is taken off, then we will probably test further lower levels, which could be somewhere in the vicinity of 48,400 and possibly the recent low. Now, why is this disconnect possible? Why is this disconnect visible in the weekly versus the daily chart? The main reason is the fight going on between the PSU banks and the private banks. Now, if you have a look at the PSU banks, see the chart. Just see the daily time frame chart. If you have a look in the daily time frame chart, you can see how weakish it is looking. A lot of big red candles. You can see first candle, second, third, fourth, fifth, not large, but pretty large enough. Sixth, so many large candles, and the same index. If you just have a look in the weekly time frame chart, again, the same thing. Downside momentum, the trend is also down. And if you have a look at the stocks, especially like Bank of Baroda, Canara Bank, these were one of the weakest stocks right now. See the way they have been falling. Now, if you compare this particular PSU banks, now all these PSU banks continue to look weak, by the way. So if any of you are thinking of buying or anything, then this is not a very good time for the bullish traders to jump in. And if you just compare these PSU banks with the private banking pack, see, this is the index of the private banking pack. This looks exceptionally different from the PSU banking pack. See, this is the PSU banks, looks weak, the price is falling, the momentum is on the downside, and vis-a-vis, if you compare it with the private banking pack, it's different. You can see there has been a significant amount of rise in the price one way vertically, which is a momentum. And with the momentum over here being up, it has retraced and it is not able to break this particular support zone. I'll just try to actually magnify for all of you so you can see it much better. You can see same band which was initially providing first support over here, then it started providing resistance over here, and now once again it is providing a support. Okay. Now within the private banking pack, I think there are two stocks which are very important, out of which one I clearly shared my view about in my previous video, HDFC Bank. Now HDFC Bank, if you have a look in the weekly time frame chart, you will get to know a lot of things, because the momentum is on the upside. The trend is trying to get on the upside, but yet it's not happening. And in this zone, if you check, I think there are two positive candles. This is the first one. This is the second one. And I think once the stock starts trading above 1713 or maybe even 1725, you will see some momentum kicking in on the upside. And the second stock is obviously the heavyweight, which is ICICI Bank, secondary to HDFC Bank, obviously. Even this stock, if you can see, it has corrected. Okay, it has corrected on the downside, and now it's trying to bounce back. And again, if I plot a fib over here in the daily time frame chart, it's clearly visible that it's trying to take support and go higher. So probably I think if it starts trading above 1270, 1280, then some sort of momentum, some sort of strength will be visible in this stock on the upside. Okay, so I think this is one sector, private banking pack, private banking stocks. I think they are trying to help Nifty to fall lesser, or to at least stay afloat on the upside. Okay, then the sector may not be able to hold it permanently because all other sectors are falling, but at least it will make sure that the maximum damage does not come from the HDFC banks and the like of ICICI Bank. Going ahead in the energy pack, somewhere, I should say, somewhere over here in this zone or in this zone, it was probable that it could give a bounce back. It could, okay, because there were a lot of positive divergences, lower lows happening over here. You can see, I would just like to highlight it with a different color. You can see lower lows and higher lows in RSI, but somehow it did not materialize, and now the trend continues on the downside. RSI is oversold. Weekly RSI going below 30 is a very big thing. So something which we should take into notice. And on the monthly time frame chart, we can see that we have retraced this entire trend by 61.8% retracement, and we are near important support zones. So this is obviously the first support, and this is second support band over here. Now what happens over here will be interesting, but one stock, Reliance. Okay, Reliance, if you have a look over here in the daily time frame chart, especially, I'd just like to magnify it for all of you. Somewhere here it bottomed out, went up, came down, it made a higher low, tried to go higher, made a lower low. So overall, this stock is, as of now, it is extremely choppy, not a very good time to trade. But if this continues to follow further down, then I think more momentum will be visible in this sector on the downside. But do remember, the sector is near very, very important supports. So if you're taking any trades in these stocks as a derivative traders, please make sure that you watch all the stocks, you watch the sector properly. Okay. Metal pack. Now metal pack, I should say straight away one thing, that it is extremely choppy. If you have a look at the weekly time frame chart, the weekly time frame chart has found support at this particular Fibonacci extension, and since last you can say 5 weeks, which means 1 week plus 1 month, it has been 1 month plus 1 week, sorry, it has been consolidating completely. And even in the daily time frame chart, you can see it is sideways consolidation. So I have no view on this particular sector as of now. I would just like to stay away. Now, talking about the auto pack. Okay, talking about the auto pack, if you have a look in the daily time frame chart, I think this was a good opportunity for short-term traders, derivative traders, to possibly take positions on the downside. But overall, if you have a look at the sector, it has been consolidating. It is sideways in the weekly time frame chart. And even if you have a look at the stocks, at the candidates of the auto pack, you will see a lot of mismatch. Like there are few stocks which are going on the downside. There are few stocks which are looking slightly stronger. Like one of the stocks, you can see Maruti. Now this is one stock which has been able to bounce back pretty nicely, but the sector is on the downside. So there is a total disconnect. And if I'm not wrong, if the stock starts trading above 12,850 or maybe even 12,950, some sort of positive momentum may be visible. How much it will last, it's a different thing. But yes, some sort of positive momentum could be visible. So there is a complete disconnect. But as a sector, if you ask, maybe some stocks are performing, but overall the sector looks weak. And as a trader, I would generally go with the flow of the entire index. Like if I'm talking about auto pack, if there are just two stocks which are looking strong and rest are looking weak, and then as a trader, I would look to concentrate on the stocks, majority of the stocks which are weak. And vis-a-vis, if the stocks are going up, like out of 6-7 stocks, there are majority of the stocks which are going up, then I would like to concentrate on those stocks and avoid two stocks because they are in the minority which are trying to go down. Okay. Finance pack. Finance pack, I think it completely resembles the private banking pack. The entire index is looking pretty much similar to the private banking pack. I think once we start trading above 23,500 or something, some sort of momentum could be visible on the upside. Consumption pack looks weak. It was consolidating till this part. Tried to give a bounce back, did not go in its favor, could not surpass this particular high. It has come down, and I think overall it looks certainly weak. FMCG pack, exceptionally volatile, a very good budget given by our finance minister, trying to boost the economy, trying to boost the consumption in the FMCG pack. But as I always say that news generally doesn't have to do a lot with the stock market. Prices are always discounted, and same thing happened over here. You can see that it gave a very big spike and then the prices started correcting. As a sector, looks weak, and wherever it starts bouncing back, I think this zone of somewhere between 55,200 to possibly 55,640, this entire zone will provide resistance to this particular sector. Infra pack. Now, if you have a look at the infra pack, I think in the monthly time frame chart, the trend is flat, momentum is down. The momentum is again down in the weekly time frame chart. The trend is also down, and even over here, you can see it was consolidating, but now suddenly there has been a new fall. So overall, it looks weak. I think once it closes below the recent low, you might be able to see some further correction. But just one small thing, we are just coming near to the lows of the 4th June, which was the Lok Sabha elections. So this is an important point. Close below this will obviously lead to lower levels. IT pack. IT pack, I should say that in the monthly time frame chart, it's not looking that bad. In the weekly time frame chart, it's looking slightly range bound, choppy, that sort of stuff. And in the daily time frame chart, it's looking slightly weak. So I think it is a lot mixed match between the weekly and the daily time frame charts. If you just go to its stocks, have a look at the important stocks like Infosys. So, okay. So Infosys, if you have a look, you can see it's consolidating in the weekly time frame chart. Even in the daily time frame chart, what we can see is sudden drop, gap down, fills the gap, again it comes down, and then we have a hammer. I think overall it is chopping out in Infosys. TCS, if we have a look, TCS is looking weak. Wipro, it is looking strong. Tech Mahindra, if you look, it is consolidating. So as a sector, I think there is not a total connection between each and every stock. Each and every big stock, each and every higher weighted stock is moving in its own way. So whenever that happens, the sector consolidates. And I think as a trader, we need trend and we need momentum to make money. So as a trader, I would like to stay away from the sector. Pharma pack. Pharma pack, I think, is one sector which is looking weak. And we can see over here, it has broken down this particular low. Prices are coming down. One stock which is looking slightly weak, and bullish traders, long only traders, should be avoiding this stock because it has started giving some signs that there has been a gap down and prices have taken resistance here. If we close below this, I think prices may correct further. So long only traders, please stay away from this stock. PSE sector, exceptional momentum in the weekly time frame chart on the downside. We have hit near the weekly lows, near the 30 mark of RSI, and even in the daily time frame chart, we are looking weak. I think if you're a derivatives trader, it makes sense to book partial over here in the PSE stocks because the RSI in the weekly time frame chart has hit close to 30. Just see when last time did the PSE sector go below 30. It was possibly in 2020. So I'm not saying there will be a huge bounce back or something, but it certainly makes sense to book partial and then hold rest with a trailing stop. Now the talk of the town, real estate pack. This is one of the most weak sectors of all these indexes. I think real estate so far in the last few trading sessions, last 1 week, it was the weakest because the reason is if you just have a look on its stocks, just give me a second. Yeah, here we go down. Okay, so you can see DLF, just have a look at the daily time frame chart. How fast is it has fallen. Godrej Properties, again, this has fallen pretty nicely. Mahindra and Mahindra Life has corrected pretty nicely. Overall Realty, you can see it has fallen pretty nicely. Prestige Real Estates, again, this one has also corrected pretty nicely. So I think derivatives traders would have made money in this particular sector on the downside if you are into derivatives. But now it's a good time to, I think, book partial and wait side with a trailing stop loss. But overall, I should say that this sector is certainly looking weak in comparison to other sectors. Mid caps. Okay. Now mid caps, if you have a look, a very big red candle, trend is down, RSI is near 30, overall looks weak and probably not a good time to participate on the upside. And one more thing I would like to say that when RSI hits 30, what happens is when we are in a bull run and if that point of time RSI hits 30, then the bounce back can get converted. I repeat, the bounce back, if it comes from the weekly time frame chart, is generally very big, and it can get converted into probably a big trend, uptrend and a rally. But if the trend of the market in that particular year is down, and if we hit RSI 30, we could see a significant bounce back, or we may not see a significant bounce back. But even if we do see a significant bounce back, the bounce back will be just a bounce back and nothing more. So probably you can get stuck at higher levels, and once again the prices will start trending on the downside. So just be careful about that. If any bounce back comes up, be very, very wise before taking positions. All right. And now the final message, I would say that yes, the trend is down, the momentum is down in Nifty and overall in the market, except private banks are looking a little bit stronger, especially those two stocks. Even if the trend is down, even if the momentum is down, this is not the right time to initiate new positions. If you're a derivatives trader, this is not the right time to possibly initiate new short positions, because we are just, you can see we are at 22,931. Support is at 22,800. We are just 130 points away from this support. Okay. And even as a trader, if you need to have a good risk reward ratio, I think this was the point. This was the spot to initiate those trades. Okay. So I think if you have done nothing in the last 1 week, don't do anything. Just stay away. And once we break 22,800, then the next support, as I told you, will come in the range of 22,570 on the downside, of 565. And in the daily chart, that particular level is 22,500. So supports are kicking in somewhere around 25,570, 565 to 22,500 once we break 22,800. All right. So I hope you enjoyed this video, and this video added a lot of value to your own analysis. Trade less, trade wisely. Thank you.